Hello traders, welcome to the Bullish Bear FX Academy. So in today's video, I'm gonna be teaching you guys how to be profitable and successful while trading with the support and resistance strategy. The reason why I chose the support and resistance strategy or the video to make it today is because support and resistance is one of the easiest and profitable strategy to use, mainly while trading volatility pairs. So today we're gonna be starting with volatility 25 index, and we're gonna be starting with the daily time frame. As you all know that you need to start from the daily time frame or 24-hour time frame when analyzing the chart. So let me quickly clear off what I've drawn here, and then we start over again so that I can teach you guys how to draw this in. Okay, using the support and resistance strategy, right? So what you want to do when you come on the daily time frame or the 24-hour time frame is take a ray line or a red angle, whichever you prefer using, but in this scenario I'll use a ray line first, and then you look for your highs. This is my highest high or high, the all-time low, and then you mark it off. So this is your resistance level. So I'm looking for the market to push to the upside to here and then come down, right? So and then I will look for my low, my lower low, or my all-time low, and then I'll plot it off with a ray line right here. Okay, so now you have your resistance at the top and your support at the bottom. So right now you can see things. Now you can see that the market is in the middle. Okay, you can see that the market is here in the middle, and you are looking for a market to go to the upside, which is at your resistance, and then bounce back. So what you want to do is you can look for strong areas or major resistance or support levels. So this is one of my strong levels that I've seen. So why did the market slow down here? Is because when the market came from the support here and tried going up, the market didn't penetrate through this zone because it was a strong zone. If you can see here, the market was consolidating or creating a corrective phase, because we know we have impulse correction and then impulse to the upside. So it went impulse correction. Now for it to impulse again to the upside, it did not, because of maybe this strong level here, and then the market started dropping. So you mark this as a strong zone because the market failed. This is not a failed setup, it's just that the market slowed down and the resistance was strong. And then when the market came down, it started going up again. And when it started going up, it failed to penetrate it through that zone. It came down, went up, and looking for volume or looking for power to go down, and then it pushed down to this level. Why did the market stop here? The market stopped here because of another strong support level here. Okay, because of this strong support level that you all can see here. So this is a strong support level. You can see that the market, this support level has been respected how many times? 1, 2, and then 3 times. This support level has been respected 3 times. So it's also much likely to be broken, as it has been tapped multiple times. Okay, so this one has not even yet been tapped. So the market is much likely to go to this resistance, which is the all-time high, and then come to the all-time low, and then tap, and then it can now start creating for you these corrective phases, and then the market can now push to the upside. Okay, so let me get rid of this, and then we just get rid of this, then we can now move on to the lower time frame so that you all can see much the bigger picture, right? So from the daily time frame or the 24-hour time frame, you have to go to the 4-hour time frame. Okay, so now when you're on the 4-hour time frame, you have to zoom out your charts to see the major areas where market is likely to stop. So here you can see that we have one, which is this one, and then our second one is gonna be this one where the market has stopped. In order for your support or your resistance level to be 3 touches minimum, right? 3 touches, like the way we have 1, 2, and 3. So this one, it's much likely that when the market comes down and taps here and then start starts showing us something like this, which is going like this. Our correction market slowing down to look for power to go to the upside. You can take that trade because why? We have one, two, three touches, right? And then it's so that makes it valid. Okay, so in this scenario, remember we're gonna be taking trades. Are you looking to getting involved into something like this, or should you wait? I would advise you to actually first look for your support levels before taking this trade. Why? Because we are at a major resistance level. So in this scenario, I can take a risk entry to go to the upside. I can take a risk entry to go to the upside to this to this resistant level because it's a sharp move that was created there. Okay, this way I'll be putting my first take profit before locking in. Why am I looking to entering that trade? Why not wait? Number one, we have something that looks like a head and shoulder here. This is the left shoulder, this is the head, and then coming here I'll look for something like this, and then the market can push to the upside. So this one also contributes to making my all-time high valid. Okay, so let's zoom out again, and then we go to the 1 hour time frame. So now on the 1 hour time frame, you can see that the market bounced where the market is slowed down, or you can see red bearish candles, and then the market came down, created something like a over or a double bottom. I'll be teaching the names of these I'll be teaching the names of these candles in the next video. If you guys are ready to watch it, you can just comment below, turn on the notification bell, and subscribe, please, guys, for more content. So here I'll be looking to entering the market area, right? Let's say you are taking a risk entry here. So where do you want to be placing your stop loss? I'll be placing my stop loss here. I'll be placing my stop loss below this support. This is like this support level that I'm gonna be drawing is just for me to know where to place my stop loss. So I'll be placing my stop loss below there. So why am I taking the trade? I'm taking the trade because we have broken out of this bullish flag. This, we call it a bullish flag. So we've broken out, and now we are putting our take profit here or here. So I'll be putting my take profit here, and my take profit one somewhere around about here. So that's the 1 hour time frame. So now I'll be going on the 15-minute time frame to look for exiting points, further exiting points from here. So let me just lower that. So me zooming in, you all can see that there are no much major resistant levels, right? There are no major resistant levels apart from this one that only has, I think, one touch because it has been broken. You can put it like this, but then the market has impulse to that upside, and then it has been broken already here, so it does not seem that strong. It's not that realistic that it has, like the market, like let me say you have something like this, and then the market comes from here, goes, hit it, comes, hit it, and then goes. Yeah, that's something that's really strong, and I'll be taking it wholeheartedly, right? But this is forex. You gotta know that there are losses and wins, anything can happen, right? So this is volatility 25 index. So let's go on to the next pair to show you guys what I'm looking for. Let's go on the 5-minute time frame, because volatility pairs you can go as low as even the 1-minute time frame to see how the market is running. So we'll come and review this trade. So for now, let me go on to the next pair. Which pair should we look at? Volatility 10 index. Volatility 10 index. Again, I'll repeat myself. We start from the 24-hour time frame, which is the daily time frame. So let me zoom out. So when it comes to this pair, so now we're going to be looking for our support levels. Which level has been respected the most? Remember, so this one looks like a strong zone for me. This one looks like a strong zone for me, because when the market pushed up, the market tried going down here, tried going down, and it couldn't penetrate to go to the downside and continue. As you can see, this was a bullish move, and then the market couldn't penetrate the downside but change its bias at this level, right? So that one I'll mark it off as a strong support level for me, and this one as well. So these ones are mine. So let's take away this one and then settle with one. Okay, so this is my support level now. This is my support level, and then my resistance level is this one. My resistance level is this one. Why is it my resistance level? You can see that the market rejected here but couldn't go up, came down, and then the market tried rejecting, broke, came, and now we are there, right? So this means the market can either drop or it can either push to the upside. So that's why it's important to look for other strong levels. So I'll look for this strong level again. Why? Because the market when the market was here, it pushed to the upside and then came down and then rejected there. That's when this move started becoming aggressive to go to the downside. So this means this is a respected area. The market is respected that area. So we go on to the 4-hour time frame. Nothing has yet been decided. We are still looking for buys and we are still looking for sells. So first of all, for now, let's just go down to the lower time frames and see what I want to be looking for. So here, this is another support level which has 2 touches, which is, let me just make it more accurate, which is 1, 2, and then this was a 3, but then it failed to reach them. So what I'm looking for is, let's say this is a bullish run to the upside. This is a bullish run to the upside, and then the market rejected from here. So there are possibilities of the market can go here and then drop to this level and then continue to the upside, or the market can do this. The market can retest that area, this area, and then come straight down to here. So how should you know which one is which? So that's why I always say go down to the lower time frame, because it exposes more than the higher time frame can expose. So let's see what the lower time frame has for us. So the lower time frame, what I'm seeing on the lower time frame is that I'm seeing that the market rejected off a strong zone here, which is a retest. In this scenario, I'll call it a retest, right? Breakout, and then the market went, and then it retested this area. It retested this area where the market stopped and then went down aggressively. And then from here, the market is looking to push up maybe to these levels, right? So what I'm gonna be doing is I'm gonna be going on the 5-minute time frame. And before I can take any trade, I'll be going on the 5-minute time frame. And then 15-minute down to the 5-minute. So on the 15-minute time frame, I'm seeing rejections. The market is rejecting. So this tells us 2 things, right? The market is giving us a message of 2 things. If you look at this area, you see that the market can be rejecting from there. But for the fact that this candle is still blue and the candle is still bullish, we don't have any power of entering sales. So we go down to the 5-minute time frame. So if it's still bullish, what can you do? If the candle is still bullish, for you to know that it's a retest and it's gonna go down, you have to wait for the candle to be red for you to actually enter something like this, but it has to break at least this low. So you have to set up this low here, and then you can take your entry, and then you can place it below that trend line or that wick, and then your stop loss can be just something right about there high, and then you can just look for potential selling opportunities to the downside to this support level, because this is also a strong level. So that's why I'm looking to selling at that area. But if you look at it, we have this sharp move, which is like an all-time high on the 5-minute time frame, and then you can zoom out and say, okay, good, maybe the market can be pushing up, but for now I'm gonna be putting myself stop here and be waiting for the market. So that's volatility 10 index, right?